Okay, in this next video, video number 2 of the Basic Financial Literacy series, I'm hoping that that means you've watched video 1, which details the financial statements at an individual level. Your financial statement at the individual level, for somebody starting out in the workforce making $18,000 a year, this is kind of a good example of what their financial picture may look like. This is the information that they probably would provide if they were buying a car or trying to apply for an apartment or something like that, right? This kind of tells you what they have as far as assets, things that they can liquidize, meaning cash out. And the only thing that they owe is a Visa balance of $219. So if we took out and cashed out their money from their checking and savings, we would get this. But we'd turn around and pay our Visa, and we would only have this. So $11,012.62 is what this net worth is. Okay? And this here is what you would see them claim on their taxes. Okay? They have a W-2 from their employer. In most cases, when somebody's has a basic return or an easy return, something like this, you get to claim $12,550 as a single filer. Married couples filing separately also get that deduction. So in this case, you can see that this is 69, well, almost 7,000 if we added all this up. And the standard deduction would be better, as it would in most cases when somebody is single filing their individual tax return. Okay? So what I'm going to do is I'm going to fast forward, because what would happen in most cases, again, this is not all cases, but just hypothetically speaking as an example. Okay, this kind of repeats itself every year, might go up a little bit as you continue to work and build your title and your responsibilities, right? It might go up, go down, and this is just what you're looking at. Now, fast forward where you find a partner, okay, or you get married. This is basically the example that I'm about to show you. What I did was I took the financial statement that you saw in the individual series right here, okay, $11,012.62. I took it and I copied it over and made it partner one's financial statement. Okay, for the sake of keeping things simple, I just copied it and made it exactly identical to their partner. So in this case, we have two partners that made the same amount of money to the penny and spent the same amount of money to the penny, just to keep it simple. And what we have here, for the sake of combining it when you get married, is we just combined the information. So here, if we totaled their checking, we would add this and this, to get this. We would add the $1,500 in each of their savings to get this. Okay, and we do that so on and so forth for everything. I do cheat. You can tell if it was out of whack because I do have a cheat sheet there. I always include a cheat calc on everything I do. So what we are filing on this married filing joint tax return is that between the two between the couple, we were claiming a total of $36,000 of W-2 income, and they would have the supporting docs for that from their employers. We're saying that, the withholding was this amount, and here's all their expenses, right? So now we're claiming 36, and then we would probably claim the standard deduction, which in this case would be $25,100. Okay, that's for as of today. I'm in February 2022, and I'm giving you the amounts for 2021. So $25,100 for married couples filing jointly. So in the interest of this couple's tax return, They would file the standard deduction and we would be good, right? Okay, they even paid withholding. So that is what it looks like. If two people that have about the same income and situation get married, right? Now, I'm going to take you to an unbalanced one, okay? And when I say unbalanced, all I'm meaning is that one partner is doing significantly better than the other. And I do see this a lot, but I think it's important to know, especially when you're the one on the other end of it, right? I deal with people that make upwards of $1 million and they don't always have this basic information. So I think that's why I decided to kind of do it in this fashion. Okay, so what we're saying here is that partner number one made $200,000 of W-2 income. Okay. They paid about $60,000 in tax on their paycheck, and they spent a little bit, right? Again, I'm keeping it super basic. What you will find is that I also threw a vehicle on their financial, but I want you to see something here. Just because we put a vehicle or a house or anything else in this asset area, that does not automatically bump your net worth up, because you have to think that we have to put a loan in most cases also on the books. Okay? And in cases where a mortgage is upside down or somebody's upside down on a loan, you can see how that can cause an issue. I will cover that in detail in another video. Okay? But in this case, I put a vehicle. You can see that they probably put $10,000 down, and they took a loan of $30,000. Okay, that's basically what happened. They paid the $10,000 from their checking and got the vehicle, which is valued at $40,000, and there's a $30,000 loan. Meaning, if we sold this vehicle for $40,000, which you probably wouldn't get right off the lot, right? If we sold that, we still have to pay this loan off, because otherwise there'd be a lien on the vehicle. There's no way you can sell a car. Okay, so you collect the $40,000. Once you pay back the loan, in your pocket is $10,000. Does that make sense? Hopefully it does. Okay, so what I kind of did, because I wanted to show you what it looked like when somebody was unbalanced, meaning somebody is making a ton of money over here, they have some assets, and they date this person, or they get married to this person with wages of $12,000. And obviously their spending is a little bit less, but you'll see that I also added, because technically I wanted their money to be in balance, and in this case, in order to do so, I put that they only have $100 in their checking. They don't have a credit card. They don't have anything else. They literally just have $100. It's because they made this money. They had expenses, and they basically spent the bulk of it. Technically, if they didn't spend this could technically be in their savings account. Okay? And I'll show you how I would know if it was unbalanced. I'll move this and make it 0. And then you can see that right now this is out of whack. It's because it's asking me where this money went. Now, if I confirmed that this $87,090 was in their savings account, that's what would happen. It would be in balance again. But when you spend it, that's not what happens. So you can see how I have to post this $87.90 of their miscellaneous spending on random stuff in order to make that tie. So what we're doing is not just taking somebody with a basic job and basic expenses. I'm wanting you to see that their net worth is $100. It doesn't matter that they make $12,000 or what. Their net worth is $100, combined with their spouse's net worth of $160. Okay, and that gives us the joint financial statement here. Okay, so you can see that they're together as a couple, which the majority of it is coming from partner one. Their profitability okay, of what they made for the year, of $130,160.50, $130,060.50 came from partner one, and only 100 came from partner two. Okay. I know it's a little hard to see something like this, especially if you're, one of the partners, but this isn't an uncommon thing. Okay. I've seen in cases where the second partner may not make anything and solely rely on their spouse. That's fine. And in cases where the spouse is going to get to claim you, and that's kind of what happens. Okay. Anytime that you as an individual are paying for everything for somebody else's basic living necessities, you should be claiming them as a dependent, similar to a child. Okay? That's what happens when you have children. Your children don't really go anywhere on this balance sheet, but you do get to claim them, and so when you claim them, you get a deduction, and that deduction is far less typically than the cost that it really takes to to raise a child. Okay, and I'll get into more details, but in this video I wanted to show what financials were, what married financials combined looked like in the case that two people had the same circumstance, and I wanted to show you what married financials for an unbalanced couple, meaning one is the primary breadwinner while the other has a little less going on. Okay, so that's what we've covered in this segment. My next series is going to include what happens when we have a business. Okay, if anything in this series or this video was unclear, I invite you to contact us or schedule a session. Thank you.